I saw your numbers the other day, took a quick look, and it's all good news. And this is pretty much as expected from what you said. So you have those up. Do you want to run through them?
Yeah, we can run through them real quick here. So, and you're right. Yeah, because we took a bet, didn't we, last month on what the total homes sold would be?
Oh, that's right. Yeah.
Do you
What
remember
did we
you
bet? Don't.
Okay, well, I don't remember either, but one of us probably won. We'll go with that, I guess. You can see a rebound, right? So when you look at total homes sold for the month, things bounce back up. We had a feeling that last month looked really, really low just because of supply constraints. And at that time, we saw more coming onto the market for August and suspected that the total homes sold in August would actually be higher than July, which is, I guess, what ended up happening. And by a significant amount, right? So we're 360 some homes more month over month. You can see that it's still down year over year, about 400 fewer than the same time last year. However, that is consistent with what we've just seen year over year based on the macroeconomic stuff, interest rates and all the rest of it. The rest of the yearly pattern has looked pretty similar, with the exception of last month. So yeah, I think this is back on trend for what we'd expect to see.
Right. So we had a dip last month. I think that took me by surprise for sure. I think it took a lot of people by surprise and caused some worry, at least between our conversations. But seems like that's corrected and we're right on track with what has been the seasonal movement, which is a lot more than before. Now we're down, like you said, year over year, but it's kind of to be expected with the supply that we've had lately. So not surprised. More importantly to me, and I think most people out there, is the average sales price. And you want to run us through there, Danny? Looks like that recovered as well.
Yeah, definitely want to go through that as well. The other thing, just before we move on, the current inventory puts us at just 1 month of supply. So that is not a lot. That is still in very strong seller's market territory. And then, like you said, the next big graph here is the sold price versus the list price. And you can see again that sold price continues to be above list price. Although those lines are starting to converge a little bit, they're getting closer. But you can see a nice rebound over last month. And the other notable thing here is up $30,000 from this time last year. That is a big change year over year. And I think probably bigger than what we've seen in other months this year compared to last year.
Yeah, that's a lot. That's really surprising, actually, and quite significant. But I mean, it just makes sense with the supply and demand that we've had. If we have low supply, which we definitely have had, they're going to sell for more. So that I'm not surprised by that. I am surprised a little bit by the number. I don't know how this thing turns around because we've kind of been on an upward trajectory since, the whole year, right? And that's in the face of higher interest rates every month. We just don't have supply. So it's kind of a self-fulfilling situation we're in where the rates have caused people to not want to sell. So we have less inventory and higher demand. Weird market that we're in for sure.
Yeah, and so the other things that show that we're continuing to be in the strong sellers market are days on market. You can see both the average days and the median days just stayed consistent with where they've been now for 4 or 5 months. Things are moving very quickly, especially things that are move-in ready. But that's all reflected there in the numbers. 5 days on market is the median, and that's about as low as it's been almost all year.
Yeah, that's as low as it should ever be because that's taking into account the highs on average as well as the lows. So that's as low as that should ever go. It doesn't make sense to go any lower. It's hard right now. And I kind of think this is a better metric of how hot the market is as far as if you're looking at the market in regards to can we get a deal in this house or not? Obviously, it's case by case, right? But the months where you have more longer time on the market, on average overall, I think you're more likely to get a lower price. So that's a good indicator for buyers' ability to get, I think. Obviously, it's always case by case, but when that number starts getting up into the double digits, for sure, maybe into the 20s and 30s, which we haven't seen for years, I think that's our better indicator of a more balanced market. So hopefully we'll see that someday.
Absolutely. And that's why these charts come so close to the beginning of this conversation, because, number one, things are going fast, which indicates there's a lot of appetite out there to scoop up these houses that are available. And then to see that things are going above asking is an indicator that, hey, it wasn't just one family that was bidding on that house. It was probably multiples. And again, that points back to a lack of supply. So people are competing over a very limited pool. And that's why prices are going higher than lists. So yeah, those are both really telling. The next one is price reduction. So again, kind of down hovering where we've been for 4 or 5 months now. Just 19% of all the houses that were sold came with a price reduction. So again, you can see the trend over the last year. Things slowed down over the winter, and then they bounced right back as we got into the new year.
Yeah, again, not surprising, but we expect that number to go up as it has every year around this time. So that's going to get a little longer. We'll see. People are just not always gauging the strength of the market under the seasonality portion of it. So we'll see if that trend continues. If it does, we'll be able to call that, every time. When you want to sell your house, when's the best time, what to expect during this time of year, which we can kind of do already. We have told people that advice before, but it's nice to see it reflected in the numbers.
Yeah, absolutely. And then the last big chart that really just tells us, the level of competition, I guess, would be, how much is going, significantly above asking versus significantly below asking. And for us, significant means 5% or more outside of the list price. So you can see that the green is at 20% of houses went 5% or more above their list price. And that's compared to just 16% that went 5% or more below their list price. So again, this is kind of balanced out over most of the spring and summer months of this year. Over the winter, that orange section was quite a bit bigger than the green. Now things are much more balanced there. So definitely reflective of a healthy level of competition for the limited supply that's out there.
Yeah, 20% of all houses going 5% over is still a lot. And again, not surprising. If anybody's looking in this market, we know that that's real right now. And that is in the light of over 7% interest rates on average. That's surprising. That's still a little bit a number that we have to correct still. I don't know how. We don't have the ability to influence that. If we all agreed as agents or as sellers or buyers to do something, we still couldn't affect this interest rate. So this is something that is underlying the whole market, our overall economic conditions, and that's just kind of what we have to deal with for a while.
What else do we need to be saying about this month?
As expected for the seasonality, we actually expect these numbers to come down next time, right? I think that's probably going to be the case. Not a lot and not a freak out, not an indicator of a change in the market, but this is what happens this time of year. We start to slow down. Everybody's back in school. Family houses are not selling because school, obviously, but we're year over year way above, and next spring we'll start picking way back up. So if you are a buyer and not moving kids out of school, now is a great time to buy. If you are a seller, so here's the thing that we need to keep in mind. If you're a good seller, if your house is in good shape and you're pricing it correctly, you're still getting 5% over, right? That's been the case. This little donut graph that we have, there are people that sell over every time in every month, and it's always double digits, right? So
a lot of times more than 5% over.
Yeah, a lot of it's way more, right?
Yeah.
So it's all been a situation of how much supply do we have, right? That's dictated everything. Sounds like we have more supply coming up, so we're going to stay flat until that doesn't happen. And for sure, after October, it's not going to happen. People don't move in the dead of winter. It's just reality. So that's part of the seasonality. Hopefully, we're a little more flat, and we'll see how this shakes out for next year. But I think you're right. We're going to flatten out a bit, a little later than usual, and before we see the seasonal dip. So,
yeah. The other thing, now that I look back at it, that might show the wind maybe coming out of the sales a little bit is the average list price versus average sales price that we started with earlier on. Those lines starting to converge a little bit. Those are getting a lot closer now. So that may just be saying that, okay, there's still a lot of demand out there, but maybe there's less, and therefore there's less competition. And even though there's more supply, so we'll see. We'll come back and obviously pull it all again next month and report out. But it'll be interesting to see where it goes.
Yeah, for sure. Okay. Thanks again, Danny, for pulling.
Yep, always a pleasure.